Okay, it says that it's preparing, but we may actually already be going because I know I've had that issue before where I feel like we're not on and we're actually on.
It looks like we're on.
Yeah, I think we're on. So, hi, this is, yeah, it's being live streamed. Hi, I'm Tara Umberzett, founder of South Bay Financial Partners, and I am here with my associate Stuart Pine and Jessica Robertson, and we are talking about banking today. And if you have any questions, feel free to hop in the chat below and let us know what's on your mind. And if you have questions or comments or want to contribute. So we have been talking in our online community, which is Your Amazing Financial Life, and we'll put in the description below about how to join. We call it YAFL, YAFL, Your Amazing Financial Life. And it's designed for college students and young professionals to find out how to deal with money decisions and get started and sort of have a good foundation and just support that beginning of adulting process. So today we're talking about banking because in YAFL, we've had a couple of discussions about bank accounts for college students, online banking, what's the best place to put your cash that you want to get some interest on, how to bank and be socially responsible. And so we've had all of these conversations, and we thought we'd go ahead and bring the discussion to a live YouTube stream and have that conversation here. So where do we start?
I don't know. I mean, I know that I am looking for a new checking account and I've been doing research on that. Checking accounts and savings accounts are not as exciting as credit cards and the different things that you can do with accounts. At least when it comes to choosing the right one. A credit card, you want to kind of optimize the rewards based on what your spending's like. A checking account, it's kind of just a little more straightforward. So
Sorry, I forgot to turn on the recording and I just did that, but go
it's
ahead.
Okay. And so, yeah, I mean, I guess we can talk about the things that we look for in checking accounts and savings accounts. And so the big one that I try to pay attention to are the fees with the checking account. And so I think banks in general are getting a lot better about fees and fee compression in the banking and investing kind of industry as a whole is helping consumers out.
And I'll throw in that actually the first place I started is making sure they're FDIC insured.
Mm-hmm.
And basically that is the federal government will secure up to, or insure up to 250,000, I think is the current amount.
Per individual,
Yeah, if you have an individual account, you can put up to $250,000. If your bank goes bankrupt, the federal government will make sure you get all of your money back up to 250. And also, if you have a joint account where there's two people on, or one person is the owner and one beneficiary, that actually is 250,000 per person. So it's up to 500,000, which for 99% of us is plenty of insurance in your bank account. So I always look first for that FDIC insurance, regardless of what you're banking. And then the second thing, I'm with you, start looking at the fees.
Yeah, and I'll probably say more than 99% are okay with 250 or 500,000. But yeah, that's a good point. And so, yeah, what was I saying? The fees are a big one. They're getting a lot better. I remember when I was looking at checking accounts when I was in maybe high school or college, probably it would have been high school. There were more accounts that had fees. And so I think they allowed you to set up a college checking account in high school, kind of in preparation.
Right.
It was, connected to my parents' account. So I think they were able to see it, which was fine. I didn't really care. But there were no fees associated, fast forward a few years and now I'm looking at new ones for myself. And yeah, like I was saying, there's not really a whole lot of bells and whistles with a checking account. Um, like I was trying to see if there were any sign up bonuses or anything like that that would kind of um, be something that would make me lean one way versus another. But all the sign up bonuses that I was seeing were, deposit 25 grand to get $100 or something. And so it's kind of like,
No, thank you.
yeah,
Although I know Jessica found a bank that did have a good discount. Do you remember? I mean, a good
Yeah,
bonus
so
program.
yeah, so there actually are some banks out there that will give you an interest rate or a certain amount of interest if you bank with them. Some of them you have to do things like have a direct deposit of $1,000 or more, and then if you have 10 expense transactions coming out, they'll give you an interest rate like maybe 1.5%. So there are things that you can find like that that are advantageous. Another feature that you can look for is overdraft protection. So some banks, they kind of have a fee if you overdraft your account where they don't actually warn you before that happens. It's just as soon as you go over, they charge you a fee. And if you don't notice it, that can kind of rack up. Whereas some checking accounts, they will actually stop, they'll cut you off and not let you overdraft. So between the interest rate that you can get from some checking accounts and then having that overdraft protection, that those kind of features can really be helpful, and they're kind of something to look out for.
And also, most checking accounts do come with a savings account, sort of like a partner account. And usually when you're setting up your account, a lot of banks will require you to have both of them. And they'll ask you if you want to have that a wall between the two, so that if you don't have enough in your checking account when you write a check, that it will go over to the savings account so that you don't have that fee. Or if you want to put a block and say, no, bounce the check. And depending on if they're going to charge you a fee or not. And we have a motto around here, know thyself. If you have to struggle with having a cushion in your checking account and you're apt to bounce a lot, then having some spare money in your savings account to absorb that can be helpful. So those are some tools that you can use. And I'll also say that there's a big movement towards online banking. And think about, do you need to have a brick and mortar, or do you not have to have a brick and mortar? And so sometimes you don't, and you might be able to get a better interest rate. Sometimes though, it's not a better interest rate. So, that's also something to take into consideration. And I'll also, and I'm sure that somebody else has some comments on that, but the minor account that you were talking about. So there are accounts that are really set up for college students, but they often will allow 13-year-olds to, I think they go to 22 years old. And they have special things, like they don't have minimum balances and they don't charge fees on certain things. And so 13-year-olds can get into that also. But as a minor, you cannot own a financial account. So you can't have a checking account or a savings account as a minor. You have to have an adult who's also connected with it, which is what you were saying, Stuart. So you have to have something like a parent or some kind of adult on that account with you who sort of supervises what's going on, but it's your account. And then one thing to note is when you turn 21 or whatever your age of majority is for this particular thing, and we have discovered that states can have age of majority for different things like financial institution, which might not be the same for drinking alcohol or having a gun or whatever. So you need to look up your state. But at your age of majority, which is often 21, that adult, your parent or whoever, is off the account, and they have no legal right to ask questions or to have any access to that account. It becomes yours and only yours, and all that money is yours at 21. So just wanted to point that out.
Yeah, those are all good points. And I think that where I landed with the checking account is even though there were some other checking accounts that were offering, small interest rates, I think I saw a couple 0.2, 0.3, some 0.5s, but not a whole lot. And so I think where I'll land is just keeping it where I do all of my other banking. So where all my credit cards are, and just out of just because of convenience. And so I will add though that depending on what you're using, so this is a second checking account. I'm different than my primary one that I'm paying my bills out of. And so there is a benefit that we don't want to overlook that is keeping money kind of out of sight. And so if that's what you're setting up, like a second checking or a savings account, that's definitely something that could benefit you. But you have to keep in mind that, if you're spending in it, you don't really want it to be out of sight. If you're saving to it, then it being out of sight, could be something appealing.
Yeah. And so what I see some people do that I think is really helpful is they're spending money in their checking account, and they might have some money in their savings account also that's connected with it to deal with bounce checks, or just for like that extra contingency fund where some months that you just have a little bit of extra and they have that savings account money that they can put over. And then they'll have their emergency fund or their opportunity fund in like an online bank that's getting a little bit more interest rate and is out of sight, and they don't look at it, and they'll do an auto deposit into that to make sure that they're saving up for either the future or for particular, like traveling or something like that.
I'll add that when I was doing research in savings accounts, so this was probably 2 years ago at this point, interest rates were very different at that point where, there were significant interest rates.
Yeah.
One of the cool things that you just talked about reminded me that Capital One their online banking, which I want to say is like their 360 savings or something like that, does a really good job of allowing you to open different accounts for different things. And so something like a Chase, you can open different accounts, but it's a little bit more work from my experience. But Capital One, you can open up different accounts and set them up like categories. And we've actually had clients that have come to us and they, connect their checking account to our financial planning software where we can see all of that. And at first it's like, oh my God, you have 10 different checking accounts. What's going on? And then we talk to them and it's like, oh, well, this is my travel. This is my emergency. This is my, et cetera. And so really it just depends on, what you're looking for from a checking account. And I think the bottom line is, the FDIC, the fees, and then the location. So whether you want it out of sight or you want to be able to look at it frequently, because the checking accounts are so boring, really those are the three things. And I think it kind of progressively becomes more interesting as you go to a savings account and then go to a credit card.
And I think that you made a good point that having your bank account and your credit card linked, because then that makes it much easier to pay off. Also, like if you want to cash out points and you can move the cash back in. And also when we were talking about bank accounts for college students, a lot of banks will affiliate with a college. And so looking at that affiliated bank is a good idea. And there might be some extra perks for you. There's probably online branches, but know that they paid to be affiliated. It wasn't like the university picked them. It's not like they're affiliated really for your benefit. And so do make sure that you look at the details and because they might not have the best fees, they might not have the best interest rate, all of that kind of thing. So do look at it, do consider it, but don't necessarily get married to it, and don't think that it's like, your school spirit tells you that you need to have that account. Like that's not a good reason to do it, but there might be other reasons. Jessica, I'm wondering, how did you decide, well, how many bank accounts do you have, checking and savings, and how did you make the decision? Like, what was your strategy in saving?
Yeah, I have a lot of bank accounts. So I have some that I opened originally with online banks, and I opened those just because they were convenient. They were no fees, and they had a feature where if you wanted to have a check sent out, you could just enter your information online and they will mail the check out for you, or what we call bill pay. And so that was really convenient for me. But then when I started doing a little bit of research into the different products that are out there, I wanted to do something that would give me a little bit of return for what I'm putting in. So I started looking for things that have higher interest rates. And I was actually able to find one. I want to say it's like almost a 3% interest rate on a savings account that I found out there. And so I started going with that one, and then I opened up different accounts at that one for different categories. So like vacation, emergency fund, so forth. So I ended up having that. And then I kept my old ones. So I have two online banks for savings that I bank with, but I primarily use the one with the higher interest rate. And then I have two online checking that I use. And one thing that I also did was I found an online credit union. And so that's another thing that you can consider, especially if you're in college. There's a lot of colleges that have a credit union on campus. And you can usually find good banking products there, as well as, because it's a smaller union, they really get to know your situation. So when you're going to later to apply for loans or maybe a mortgage or a car loan, they are more willing to work with you than a lot of the larger banks. So one thing I did was I found they actually have a credit union out there. It's not affiliated with a college or anything, but they're primarily online, and they do give you a pretty high interest rate for your checking, no fees. And then also they offer a savings account with a pretty decent interest rate.
Wow, that's amazing. So in the 3%, was that for the savings account, was that an introductory offer, or is that all the time?
That's just all the time. And it might have gone down a little bit since then. I'll look into what the rate is. And if anyone's interested, I can put like the name of the bank and the rate and everything. But yeah, it was a standard rate.
I know, back Stuart and I used to have conversations 2-3 years ago, and the online banks did have the 2-3%, but that did come down. That was sort of an intro when they first got started, and so that has changed. And as Stuart said at the beginning, it's become harder and harder to find some place that has a higher interest. But this also gets back to each bank is trying to go after a certain market. And so there are some that are going to try to pull people in with that higher interest rate. And then they might charge fees for things that may not affect you. So for instance, they might be charging for, overdraws. So they might be charging for transfers or ATM usage. And if you're not using any of those, so you're not going to be impacted by those fees, but you can take advantage of that high interest rate, find that. So figure out what's important to you and where, do you need ATMs? Do you not need ATMs? If you don't need ATMs, go to those ones that charge fees for that you're not going to charge because you don't need them, but you're going to get a different perk that is something that you want. Just like credit cards. Actually, we have the same conversation with credit cards. But I also wanted to bring back to credit unions, because you all know I am a credit union fan, huge fan of credit unions. I always tell people to look for their credit unions. And just for edification, the credit unions are very similar to banks, except they're not like for-profit public institutions. They are nonprofit financial institutions that are set up for their members, and how they define their members is in their charter. They decide. So what often happens is large companies like FedEx or IBM will have a credit union for their employees. Locations will have them. There's a credit union for anybody who lives in Southern California. The schools will have credit unions. And because they're member only, they have a select membership that it tends to have better payback loans, better, are more attentive to their finances. And so they don't have some of the overhead costs that banks that just are open to anybody has. And depending on how big their membership is and how secure their jobs are and those kind of things, they can get their fees down lower. And I always tell a story where my daughter was getting a car, and she decided that because interest rates are low, she was going to keep her money invested and get a car loan. And the most expensive place was the car dealership that she got it from. It was like 7% or something for the car loan. We looked at our Southern California credit union and it was about 3.5%. We looked at my husband's work credit union. It was about 2.5%. We looked at her boyfriend who she lived with, father worked for FedEx, and that was like 1.75 or something. And so she ended up getting the 1.75 interest rate, and 7% to 1.75, huge difference. But that's what credit unions do, especially car loans and home mortgages. They give the best rate. So if you are qualified as a member for a credit union, we say definitely take a look at that. Some credit unions actually aren't good. I've looked at credit unions that are basically the same as banks. So not going to say that it's 100%, but most credit unions, and especially, as I said, if their membership is really solid, you can get some really good deals. So look, and also know that if you live with somebody, if you join the FedEx credit union, even if you stop working at FedEx, you can keep that bank account forever. So we say, if you have a good credit union, never ever let go of that credit union, even if it's not going to be your main banking account. You definitely want to have access to it in case you need a car loan or a home mortgage or something like that. So that's my spiel on credit unions, but anybody else have some input on that?
No, I mean, I think I'll just add that, we have clients that keep $100 in a checking account at a credit union just to be able to utilize things like student loan refinancing, mortgages, car loans, like you were saying. But yeah, I mean, that's really like the benefit that you're going to get from a credit union is things like that, those loans, those large ticket items that that are going to save a lot of money over the long run.
And if you work at the company or it's your school one, they have branches usually right there. They're usually the most convenient bank also. So that can also be a reason. And they tend to have better interest rates than other ones.
Bobby
yeah.
just mentioned in chat that he got a savings account with Discover last year, which is a good company to open a savings account with. Last year it was 1%. It's already down to 0.4%. And so, that's pretty common. And honestly, I'll say that 0.4 right now is pretty solid for what's out there, unfortunately, but
yeah. Well, and it's sort of like if you want to play the game, like some people play the credit card game and, open things for their intro offers or their benefits and then move on. You can probably get some intro rates and move on. So if that's something that you find fun and want to spend your time on, you can definitely do that for the average person.
I'll also add that I think savings accounts, when it comes to the interest, especially where the interest rates are right now, it's not necessarily like you're not going to get a great return, but if it's something that motivates you to save more, that's going to be better than any kind of return you can get from a savings account. And so I know that I've had friends in the past that had used Ally when, we were at 2.5% interest rate, and that definitely motivated them to save more. And, that in and of itself was, was worth it. And, we'd be joking around about the stock market going up and down, and then someone would jump in and say, yeah, well, my Ally savings account just paid me 2.5%. And
guaranteed.
Yeah, exactly.
Yeah. And actually you mentioned Bobby, and Bobby is one of our fans that we talked to, and he was bringing up last week social responsible banks, which I thought was really interesting, and did a little bit of research on it. And there's actually an organization that vets banks internationally for their charitable giving, contributions to the community. And there are some really interesting banks that are small. Usually they're small local banks. And so looking to see what's around your area is one thing to look at. And if you want to support them, that's not necessarily a bad idea. I say, make sure they're FDIC insured. But then other than that, like if they're giving back to your community or to a community that maybe needs a little extra help, I absolutely say use your money to support your values. We think that's important.
Do we want to talk about savings accounts, or have we kind of beaten this topic a little bit?
Does anybody, I actually can't see the comments. I don't know why. So is there anybody that has any questions that they want to throw out? I see that we have some people watching us. So welcome to, this is South Bay Financial Partners talking about banking. And we do have an online community for college students and young professionals, learning to adults and the basics of financial decision-making and how to navigate making sure that you make financial decisions that support your values. And we also have a pretty significant emphasis on the fact that there aren't right and wrong answers about money, and that a lot of times people can be embarrassed or ashamed of a money decision that they considered a bad decision. And our philosophy is that there's no bad decisions. You make the best decision you can at the time that you did, given the information and where you've been. And so a lot of people can feel like they should have done something different. And we have definitely seen people should themselves into the poorhouse. There are no shoulds in life, and you should be making your own decisions to support your values in your life. So that's sort of our emphasis and what we think is important. So,
yeah, I just heard from one of my friends who's watching right now that Ally's down to 0.5%.
Yeah, I couldn't find anything over 0.5 right now. But the other thing also, when I was looking at some banks, is what the minimum amount is, and that can be really important. So, if there's a minimum of $200 or $300 and that's a struggle for you, there are banks that have $1 limits and all you need is $1. So especially when you're first getting started, that can be super helpful.
Yeah, and I'll also add, this is a really good point that I forgot about when we were talking about fees, is that a lot of fees are waived if you carry an average daily balance of X amount, or if you have direct deposit set up. And so, if you have those things ready, that's great. But, don't just see no fees and just take that at face value, because there's probably, or there might be a little asterisk next to that says, if you have these qualifying events. But yeah, I mean, checking accounts as a whole are getting so much better in terms of fees. And so, more often than not, there's 0 or close to 0 fees, but you still want to do your due diligence, because there's no reason to be paying fees, today, unless you're, and I don't even know if like the Chase preferred customer that has 100 or 200,000 in their account pays fees or not, but they get some concierge services, and
right.
I don't even really know what that means. There's probably just a different phone center that answers your call.
I think there's more people calling you to tell you to invest in their
right. They're
financial products.
yeah, exactly. But yeah, I mean, there's no reason to be paying fees for a checking account nowadays.
Yeah. Yeah, and actually, along that line is, often banks will charge fees unless, as Stuart says, they're looking for relationships. And if you have a lot of relationships, which means, having a credit card, having direct deposit, having a loan, there's usually a list of things that you can get, and they'll have a point system. And if you have 5 points, then you don't pay the minimum, monthly amount. So do note that there might be a monthly amount, but you might be able to get it waived if you develop relationships. So like bundling your credit card with your bank at one place can help you do that.
Yeah, there was a checking account that I looked at today that gave you up to 1% interest on the checking account, but there was like 5 different things that you could do that, utilizing their investment platform, utilizing their robo, and each one of those gave you, point 0.1 or 0.2 that, so you could eventually get up to 1%, but that gets back to the whole idea of like the rewards on a checking account. They're not really going to be there. And the convenience or looking for the structure of your accounts, that's going to take priority than opening 5 different random investment accounts to try and get an extra 0.1 or 0.2% out of your checking account.
And you'll probably pay more in fees to that robo account than you get
Right.
interest in that checking account. So make sure you do the math on the whole thing.
Yeah,
which
that's a
gets
good
back
point.
to, most of us don't like to do math. I mean, that's sort of our bailiwick and we love it and we love to play with numbers, but the average person like doesn't want to think about numbers. And so they're basically, catering to those people and charging you here and giving you interest here. So make sure that and so if you're not a numbers person, have somebody help you who is a numbers person figure out if it's actually a good deal or not.
I think a really good topic when it comes to checking accounts that we kind of touched on, but not really, is how to structure checking accounts for a household. So more than just an individual. And so I know my age group is running into this a lot where finances are starting to become joined with a significant other, and trying to figure out, do we each have our own checking accounts? Do we have a joint? Is it a combination of the two? And so, we've walked through this before with some clients, and I'll say that there's no right answer. It gets back to, what works well for you and the way that you and your significant other work well together. So some people really like having their own checking account that, no one else is looking at, and, they know how much they can spend. Different couples like to have different amounts to spend based on income or expenses. I just read something that women spend 70 to 80%. They are 70 to 80% of consumer spending, and probably what moves that from 50-50 is because they're more likely to go grocery shopping and make household purchases. And so if you are in a relationship and you are setting up your checking accounts, you have to take into consideration who's spending what and where they're paying that credit card from. And so if someone's, paying the full rent or the full mortgage, you got to pay attention to how much is being deposited in that account. Or, just having one pot that everything is paid in and out of. So there's a lot of different ways to do it. No right or wrong way. The main thing is having open conversation with your significant other and doing it in a way that you're both comfortable.
That's what I was going to emphasize too, is that there's no right or wrong. It's about the communication and being comfortable talking about it. And I'll tell you right now, if you're dating somebody and not talking about money and you're thinking about getting married, like I really strongly advise that nobody ever gets married without having money conversations before they get married. If you're uncomfortable talking about that, you are not ready to get married. And I usually don't say such extreme comments like that, but I think that is one area that there's a reason why money is one of the leading causes of divorce, and it's because people don't talk about it enough. So have those conversations, get comfortable talking about it, be sensitive to the other needing a sense of safety, clarity, because one of the problems that we also see is one will do the spending, the other will pay, and the one paying thinks that the one who's spending is spending too much, and the one who's spending doesn't really understand the whole balancing the checkbook thing, and so then they're miscommunication and it's cross conversation, and that's actually the start of a lot of conflicts. And so you can solve that by having those conversations and explaining, why the expenses are what they are. And also one thing that we've found is that a lot of times the guy is in charge of balancing and paying the bills. And it's actually the lady who has better, it's just more in her wheelhouse. And I'll say that, you know, there's not always a male female binary relationship either. So that can, you know, go any which way. But and I think that the concept is still there, that sometimes one person is paying the bills and balancing the books, and they aren't, that's not necessarily in their wheelhouse. And they don't realize that they might be the strategy, the big picture person, that might be in their wheelhouse, but the other person is actually better at the detailed stuff and making sure that things stay balanced. So if things aren't going well and you're not balancing your budget, think about switching jobs and see if that doesn't help.
I'll insert kind of a shameless plug here. This is a really good conversation to have with a professional if you are struggling with it. And so this is something that we do talk a lot about with our couple clients. Clients that are couples. And so, you know, just having that open conversation, whether it's with a financial planner, a therapist, you know, some kind of third party there, you know, it's an investment to pay money for, to have those conversations. And, you know, we're confident in the value that provides, whether it's with us or someone else or a therapist or, you know, a pastor at a church or during and I'm not super familiar, so I know I'm probably butchering but I know that there's, maybe it's a Catholic church that does the premarital kind of classes and courses and counseling. And so
and there's also nonprofits out there that can help too. So lots of resources, and, you know, definitely DM us or and actually we're on Instagram, South Bay Financial Partners, and we're also on Facebook. So, you know, you can leave a question in the comment or say that you want more information or contact us in one of those places. Yeah.
Bobby left a message, left another chat. And he said that YNAB can make it easier to manage accounts with a significant other. And so for the people who are watching that are not familiar with YNAB, you need a budget. It's the budgeting tool that we use with a pretty solid amount of our clients that are, you know, the more cash flow type of client. It's a very granular look at a budget. It's a zero-based budget, if you guys are familiar with that. But yeah, I will, you know, echo that. It's something that me and my significant other picked up probably a year ago. And it definitely, you know, fostered really good conversations. It was kind of a nice little icebreaker into the concept of being able to see a significant other's purchases and expenses and income in a manageable way, I would say. And I think the biggest value add in terms of, you know, this conversation is that it's a much more proactive way to have those conversations where you're deciding, you know, let's put aside $300 for groceries and plan for that, rather than, hey, why did you spend $400 at the grocery store? We didn't have that money. And so, you know, you can kind of talk forward to it rather than talking back on it.
Yeah. Jessica, you've been sort of quiet. Do you want to jump in?
Sure. No, just talking about this just kind of reminds me of a situation I was in. I don't know if I should talk about this or not, but I was in a relationship, and for some reason we decided to join our bank accounts together, which ended up not being a great idea because he ended up overdrafting the account, spending all the money in the account. So that you guys talking about like relationships just kind of brings up the, I guess, advice. No, like if the person is not being responsible with the money on their own, or if you're the one who's not being responsible with money on your own, you definitely need to maybe reach out to someone for advice. Like Stuart was saying, and like Tara was saying, there's the nonprofits, there's the churches, there's us, if you want to come to us. make sure you're getting that kind of advice and kind of help before you commingle your funds, or before you really try to manage your funds together. Just make sure that there is some level of responsibility there.
Yeah, and actually good point that like before commingling, having discussions, because I get the sense that you understood that the other person might not be as diligent, because Jessica is very diligent with keeping track of her money, wasn't as diligent as you were. Did you have that sense before you commingled or no?
So I saw that they weren't being responsible on their own, but I thought surely, if it's the two of us together, like,
Yeah.
it's because it's shared, they'd be more responsible with it. But I guess when someone is doing something, on their own, just because they're coming in and doing it with you doesn't mean that it's necessarily going to change their behavior.
Right. Yeah, that's a really good point. That's a good point. So maybe supporting the other person to try to wrap their head around being more responsible, and like why are, and not, it's not even a responsibility. I hate using that word, because it's really just having the tools and the beliefs and the behaviors and the mindset to do the work to make sure that you don't overdraft and that kind of thing, which that can be a whole process, especially if you're, from being never doing this before to like learning what the boundaries are and how to organize it. Because that's one thing that we also find with our clients is a lot of times we introduce YNAB, but we also have the conversation sometimes before, sometimes after, like, how do you organize? How do you know that you have enough money to spend? And just look at how they walk through that as a starting point. And different people are at different places, and hopefully everybody is trying to, iteratively get better. But sometimes there's a lot of stress related to that. Sometimes you've had a negative experience and it could be not even your fault. Like, your parent, one of the worst stories I hear not infrequently is that somebody has money in the bank or a piggy bank, and a parent takes it in order to pay their bills because they didn't have enough. And that leaves scars that are really hard to get rid of. And so if you come into adulthood with some of those experiences, you might have, it might take you a few extra steps, or a few steps that are different maybe than somebody else who hasn't had those experiences. So just keep that in mind.
I'll also add, obviously hindsight's 2020, and
Yeah.
we learned something from all experiences in life, or at least hopefully. This is a good reason why, and again, I'm making blanket statements, so the individual is going to have different experiences, but this is a good reason for people who have significant others to maybe try experimenting with a shared budget rather than shared bank accounts, because you get a lot of the benefits of that kind of oversight and open communication, without some of the kind of unfortunate things that Jessica just shared. But yeah, so that's why, huge fan of using a budgeting app for more reason than one.
Yeah. And definitely communicating, definitely talking about it, and step by step. Yeah, I think that's really good.
And I do think it's not uncommon to kind of, for the experience that Jessica had, I think that a lot of people jump into to sharing bank accounts very, very quickly. And I know this sounds like I'm making commentary on you, Jessica, but I promise I'm not picking on you. It's, you're not alone in that. And so, having those conversations, doing what you can ahead of time. And again, this is super front of mind for me right now, because, what did I say? How many weddings do I have planned in the next six months? And so, it's a thing that the mid to late 20s, everyone's talking about that, thinking about that. And, couples are ready to join finances at different times. Each couple's on their own timeline. And so, it's really something to think about before you do, and, make sure that you have the conversation so that when you do go to joint finances, you do it in the way that's really the best for you as a couple.
And you might not even join in it. One person I know got married, their finances are completely separate. And that's because that's how she feels safe. And she wouldn't feel safe commingling. And so, before they got married, they had that discussion, and the husband, was compassionate and understood and said, okay, yeah, I get that. So they kept them separate. And then they discuss debt, like taking on, a car loan or a mortgage or something like that. They discuss that together, and actually he bought something on debt, and she's like, you can do that. I am not participating in that, and you have to pay off that debt. But she came to the marriage with student loans and feels very strongly that she's paying that. He does not have to pay any of that. So like they had all those discussions while they were still dating, and set up how they were comfortable dealing with money, making money decisions, dealing with debt, all of that before they got married, so that going into the marriage, like there was no question, and they had open, honest, compassionate conversations with each other to make sure that continued to go on. So even if you choose to keep separate, doesn't mean that you don't have those conversations, and doesn't mean that you're not solid, married forever. Because a lot of people think that if you have separate finances, that somehow that's going to impact how close you are, or how really married you are. And it has nothing to do with that at all. So like, I really do want to dispel that belief that you can have separate finances and be solidly married to each other.
Yeah, it's the same as some people sleeping in separate beds.
Yeah.
Like couples do that for their entire marriage, and what they realized was, so and so is a really light sleeper, and I toss and turn, and so we're just not a good fit when it comes to sleeping next to each other. And there's nothing wrong with that. Really, the wrong thing would be not talking about it and not coming up with a solution. It's sometimes people see like, oh, you sleep in different beds, like, okay, like there must be something wrong, but really no, it's like,
yeah,
they talked about it. And so, you have to respect things like that. And, it's the same thing with the checking accounts and finances.
Yeah, and I did with my prior significant other. We talked about if we were to do something like that again, we would have an account where it was joint, and then we would have our own separate accounts. And we would do, like Stuart was mentioning, do a budget together. And then whatever was joint, like maybe we would share rent or groceries, that type of thing, put only that money in that account. And that would be all that's for. And then we would have our separate accounts. So that kind of ties back to banking, where you can actually, have all that at one bank, and it makes it easier for each of you to still have your independent accounts, and then still be able to join together for the joint expenses, if that's something you're interested in doing.
Yeah, that's a really good point. And also with Venmo these days, it's easy to Venmo that person. So that's nice.
The funny thing about Venmo is that my significant other and I got so sick of Venmoing each other for every little thing. We'd go to the grocery store, we'd pay the electric bill, pay rent, and there was just all these Venmos going in and out of our individual YNABs, that when we'd go to categorize transactions, there'd be 15 Venmos, and all it said is Venmo. Yeah, and so that's how we decided to start using a joint YNAB. But
yeah, and that's interesting, because that's a really great solution also. And it's sort of, yeah, you're managing your money together, which is without necessarily
exactly, like you still have that autonomy that you have your own account, you have your own credit cards. And so, yeah, I love how this turned into like a couples finance thing, but I think it's probably one of my favorite topics, which I know I probably encouraged the shift to this topic, but subconsciously.
And I want to say, if you out there are watching this and thought that this was interesting, talking about couples, definitely give us a thumbs up, and we'll do it again, because I could see having a whole series, a whole
course on this.
On couples, because it is a tricky area.
Yeah.
And especially money, because money can be tricky anyways, because people have all sorts of beliefs and behaviors and things, and some of them they're scared about, and some of them they're worried about, and some of them they're ashamed about, and so they don't even. And actually, I was just reading that like people are more apt to talk about sex than they are about money, which just blows my mind that people are so uncomfortable talking about money. So we definitely want to make it not uncomfortable. And I think we're up to the end of the hour. So is there any, if you want one last question, put it in now and we'll answer it. But if not, then we are planning on doing this once a month. This is our Ask Us Anything program. And we will be back, what is it, the fourth Monday of every month. And we will be live here on YouTube. We are trying to get live on Instagram too. Had a little bit of technical difficulties. We need to resolve some technical issues to get all three of us on that. But hopefully by next month, we'll have that resolved. So we'll be on Instagram and on YouTube in the future. So I think that is all.